Hello, everyone, and welcome to Channel 41. I'm Jalen Brooks, and I'm here today as your stock analyst and financial advisor to break down some exciting, market insights. We'll be diving deep into Apple, ticker symbol Apple, and dissecting its recent performance. So, look, from the data, Apple's current price sits at $237.33, slightly up from its previous close of $234.93. Market cap is a hefty $3.59 trillion, quite impressive. The price-to-earnings ratio stands at 39.03, suggesting, a bit of a premium valuation. Earnings per share are solid at $6.08, and we see a modest dividend yield of 0.42%. Over the past year, Apple stock has seen a high of $237.81 and a low of $164.08. The recent data shows some volatility, with prices fluctuating between, roughly $215 and $237 in the past 3 months. We see a significant jump in volume on October 25th, coinciding with a price increase. Nia, what's your initial take on this recent price action, given the market conditions?
Well, Jalen, thanks for that overview. So, looking at the data you've presented, a few things stand out to me. First, that price-to-earnings ratio of 39.03. That's definitely something to consider. In the current market landscape, it does indicate investors are willing to pay a premium for Apple shares, but we need to, question the sustainability of this. Is the growth potential truly justifying this valuation? Second, the earnings per share at $6.08. Solid, yes, but how does this compare to previous quarters and industry competitors? We need to dig deeper to see if this reflects actual growth or just market sentiment. Third, the 52-week high and low provide a good perspective on the stock's range, but they don't tell the whole story. What were the catalysts driving those extremes? And, are those factors still relevant today? Now, about that volume spike on October 25th, interesting. Was there any specific news or event that triggered this increased trading activity? This could be, a critical piece of the puzzle. And finally, the recent price fluctuations you mentioned, between $215 and $237. Okay, so this suggests some underlying volatility. What factors might be contributing to this? Is it broader market trends, industry-specific concerns, or company-specific developments? We need to, analyze these fluctuations in the context of Apple's overall financial health and future prospects.
Those are all excellent points, and I appreciate you bringing those up. I agree that the price-to-earnings ratio of 39.03 is high, especially in the current market landscape. It's crucial to assess whether Apple's growth potential justifies this valuation. As for earnings per share, while $6.08 is solid, comparing it to previous quarters and competitors is essential to gauge actual growth versus market sentiment. Regarding the 52-week high and low, identifying the catalyst behind those extremes is key, and determining their current relevance is equally important. The volume spike on October 25th is intriguing, and investigating any related news or events is definitely warranted. And yes, the price fluctuations between $215 and $237 do suggest volatility. Analyzing this in the context of Apple's financial health and future prospects is a must. So, to address some of your points, let's delve into the provided data. We see that Apple's revenue has grown by 2% year over year, reaching $391 billion. Their services segment shows strong growth at 13%. However, iPhone sales remain flat, and Mac sales show a modest 2% increase, while iPad and wearables, home and accessories sales declined. This mixed performance raises questions about Apple's future growth drivers. Considering these factors, my 3-month price prediction is around $240. 6-month prediction around $250, and 12-month prediction around $270. I recommend a hold rating on Apple. Nia, what are your thoughts on these predictions, given the revenue breakdown across different segments?
Okay, Jalen, so about those predictions. A 3-month prediction of $240, 6-month at $250, and 12-month at $270. Well, they seem optimistic given the revenue breakdown you just highlighted. A 13% growth in services is definitely positive, but can it really offset the stagnation in iPhone sales, which is, a major revenue driver? And the decline in iPad and wearables, home and accessory sales, well, that's a concern. It seems to point towards market saturation or perhaps increased competition. To be honest, I'd be more cautious. Look, we need to consider the broader economic climate. Is consumer spending likely to increase or decrease in the coming months? This will directly impact Apple's sales, especially for their hardware products. And what about technological advancements? Is Apple positioned to lead the next wave of innovation, or are they, at risk of falling behind competitors? These are crucial factors that need to be considered before making such bullish predictions. So, while I appreciate your optimism, I think a more conservative approach might be warranted until we see more concrete evidence of sustained growth across all segments.
Nia, I understand your cautious approach. You raise valid concerns about the reliance on services growth and the potential impact of broader economic conditions and technological advancements. So, let me address those. While the 13% growth in services is impressive, it's essential to evaluate its long-term potential and its ability to compensate for the flat iPhone sales. The decline in iPad and wearables, home and accessory sales does warrant attention, and exploring market saturation and competitive pressures is necessary. Consumer spending trends and Apple's position in technological innovation are indeed crucial factors. However, I believe my predictions consider these aspects. The projected growth considers the potential for Apple to innovate and capture emerging markets. While a conservative approach is always wise, I think a hold rating is justified given the current data. Apple's strong brand, loyal customer base, and potential for innovation provide a degree of confidence. However, continuous monitoring of market trends and company performance is essential. So folks, that concludes our analysis of Apple. I encourage you to stay informed and conduct your own research before making investment decisions. And don't forget to follow Channel 41 and like and subscribe for more insightful discussions like this. Thank you for tuning in.